So you sent over this EQI morning briefing, and let me tell you, it's a lot to unpack.
Oh, it is.
Feels like we've got our own personal financial analyst giving us the rundown on everything.
Pretty much. We've got
Yeah.
stocks, crypto, even Disney, and the future of retail.
Yeah, so we're calling this a deep dive for a reason, but let's start with the basics. How did the markets do yesterday? Give us the big picture.
Okay, so it was a bit of a mixed bag, actually. The S&P 500, it dipped a bit, down 0.6%,
Okay.
ended up at 5,985. But then you've got the Dow with its, more stable companies, the blue chips, and it actually went up a little,
Interesting.
finished at 43,958.
So very different stories there. Do you think that means anything? Like, are investors looking for that stability right now?
Yeah, it's possible. I mean, when things are uncertain, people tend to go for those companies that have a track record,
Right. The ones that have weathered the storms before.
Exactly. And the Dow companies, they're often, older, more established, they pay dividends.
Yeah, that makes sense.
But then, of course, there's the Nasdaq.
Yeah. The tech-heavy one.
Right. And that one saw a bigger drop, almost 0.3%, closing at 19,230.
Okay.
And the Russell 2000, which tracks those smaller companies, that one took a harder hit,
Oh, wow.
down 1.35%, ended at 2,369.
So maybe a back-to-basics kind of vibe in the markets right now?
Could be. It's only one day, though, so you can't read too much into it.
True. But speaking of things people are watching, the briefing mentioned that Bitcoin went up.
It did, yeah. Over 0.8% to hit 91,240.
Okay, and how about Ethereum?
A much smaller increase, just 0.07%, ending at 3,193.
So, typical crypto, big swings either way. Anyone investing in that needs to have a strong stomach.
Absolutely. Roller coaster doesn't even begin to describe it.
Okay, so let's move on to some specific sectors. Tech, first, the briefing talked about that tension between innovation and regulation. What's going on there?
Well, it's this really interesting situation, right? You've got companies doing all this amazing stuff with AI, machine learning, all these cutting-edge technology.
Right, pushing the boundaries.
But then you've got regulators, especially in the EU and the US, who are trying to figure out how to make sure all this happens responsibly.
So it's like a balancing act.
Exactly. You want to encourage innovation, but you also need some safeguards.
Yeah, makes sense. So for these tech companies, being able to adapt is key.
Oh, for sure.
Yeah.
It's not just about having the coolest tech anymore. It's about being able to see those changes coming and adjust to them.
Okay, and what about energy? I know the briefing mentioned some big shifts happening there.
Yeah, the move to renewables is really picking up speed. Climate change concerns, new tech, government incentives, it's all pushing things forward.
And it's global too, right?
Definitely. It's impacting everyone, businesses, investors, policymakers, the whole world.
I thought it was interesting that the briefing mentioned how traditional energy companies are actually adapting to this.
Yeah, they're not just sitting back and watching it happen. A lot of them are putting money into renewable energy projects, diversifying their stuff.
Okay.
Even looking into things like carbon capture and storage. They realize that things are changing, and they got to change too.
So adaptability, again.
Big time. In pretty much every industry now, you have to be able to adapt or you're going to get left behind.
And speaking of adapting, what about finance? The briefing mentioned this whole thing with traditional banks and these new fintech startups.
Right. It's a race, isn't it? You've got these huge banks with all their resources and customers, and then these scrappy little fintech companies who are like, hey, we can do things better and faster.
So what does that mean for us, the regular people who use banks?
Well, it could mean a completely different banking experience in a few years. We're already seeing faster transactions, more personalized services, everyone going mobile.
So potentially a good thing for consumers?
I think so, yeah. More convenient, more personalized, but there are also questions about security, privacy, all that.
Yeah, that's always a concern with new tech.
It is. It's definitely a mixed bag, but a very interesting one to watch.
Okay, now zooming out a bit, the briefing also talked about some global market stuff, specifically the strong U.S. dollar.
Yeah, that's a big deal. It impacts so much commodity prices, emerging markets, investments all over the world. Everything's connected.
And speaking of connections, what about retirement planning? I was reading about the briefing's advice on asset allocation, and they had some interesting thoughts on that.
Yeah, they said you shouldn't have more than 60% of your retirement portfolio in stocks.
Really? See, that surprised me a bit. Why would they say that?
Well, stocks can be volatile, right?
Hmm.
Especially as you get closer to retirement, you want to protect what you've saved. Bonds are usually less risky.
Makes sense.
And historically, they've actually kept up with stocks in terms of returns, but with less of those crazy ups and downs.
So diversification is key. Don't put all your eggs in one basket.
Exactly. Spread the risk, figure out what works best for your situation. There's no one right answer for everybody.
Now, before we move on, I've got to ask about Disney. The briefing talked about their success with streaming and these new movies like Inside Out 2 and Deadpool and Wolverine.
They're killing it, aren't they? They've figured out how to do both streaming and blockbusters.
It's like they're the new Hollywood.
Yeah, it really makes you wonder what the future of movies and streaming is going to look like.
But not every sector is doing so well. The briefing also talked about Advance Auto Parts closing some stores.
Yeah, that's the tough reality for a lot of brick-and-mortar retailers right now. They're up against those online giants. Consumer habits are changing.
It makes you think about the future of retail. You know, will we all just be shopping online someday?
It's hard to say. I think physical stores still have a place, especially the ones that offer something special. But they definitely need to adapt.
So, another example of adaptability being crucial.
Absolutely. It's the name of the game these days.
Well said. So the briefing also included some predictions for the future, right?
Yeah, they said we should expect continued volatility. The economy, central banks, global events, it all creates uncertainty.
Sounds like a roller coaster.
It can be, yeah. But the key is to have a good strategy, stay informed, and be flexible.
Solid advice. This EQA morning briefing has been super informative.
It has. We've covered a ton. Everything from market performance to the future of retail.
But before we wrap up this part of our deep dive, I'm curious, was there anything in the briefing that particularly stood out to you? Something we didn't really get into, but that you think is worth thinking about?
You know, there was one thing, they just mentioned it briefly, but it really caught my attention. They talk about the future of gold as a safe haven,
Oh, interesting.
especially with the US dollar being so strong. That's a dynamic worth exploring.
Yeah, because, usually when things get shaky in the economy, people turn to gold.
Right, to protect your money.
Exactly. But with the dollar so strong right now, it makes you wonder if that'll still be the case.
So maybe that whole gold is safe idea isn't so simple anymore. It's definitely more complicated. Like with anything, there are so many factors that can affect how an asset performs.
Yeah, and I think this is a good example of how these deep dives are really just the beginning. There's always more to dig into.
Absolutely. Investing is all about constantly learning, adjusting your approach as things change.
It keeps things interesting, that's for sure. But it also makes me appreciate having a good source of information, something like this EQAI morning briefing.
Oh, for sure. Trying to stay on top of everything yourself, the markets, the economy, what's happening globally, it's overwhelming.
It really is.
Having something that filters all that and gives you those key insights, that's super valuable.
Couldn't agree more. So, to our listener out there, we hope this deep dive has given you some things to think about. Like we've been saying, the markets can be unpredictable. But if you stay informed, spread out your investments, and are willing to adapt, you'll be in much better shape.
And remember, it's a marathon, not a sprint. Don't get too caught up in the day-to-day stuff. Keep your eye on the long game.
Great advice. And if that whole gold as a safe haven thing has you curious, definitely look into it more. See what the experts are saying, get different perspectives, and then decide for yourself.
Exactly. Being an informed investor means doing your research, thinking critically about what you read, and making choices that fit your own situation.
Well said. So, to our amazing listener, keep those questions coming, keep learning, and keep exploring all this stuff.
Until next time, stay curious.
And stay informed. Yeah, we really did cover a lot today, but, that's kind of the point, right? To give you that information, those different angles, so you can make your own informed decision.
Exactly. And, maybe in doing your own research, you'll come across something we didn't even think of.
Oh, I love that. Like, we're all learning together, constantly discovering new things.
That's what makes it so interesting.
For sure. So, to our listener out there, keep those questions coming, keep learning, keep exploring, and until next time,
Stay curious.
and stay informed.